What is going on, traders? It's your boy Kenneth Beard here, aka Stock in This Feast, and I'm back with another video where today I'll be going over my trades that I currently have and just update you guys on what's going on with the portfolio and give you guys some more knowledge on how to become profitable traders. So, I'm going to thank you all for tuning into this video. I'm not going to waste any time. Let's hop straight into this. So, right here we got the ES. I'm gonna break this down really quick. I'm gonna break this down really quick, and let me go ahead here and get rid of this. But I'm gonna break this down really quick so you guys can see and understand exactly what my thought process is around trading the SPY as of right now. So first thing I want to do is I want to look at this weekly chart here. I'm trying to figure out a decent place to put I'm gonna just put my face down there. All right, so looking at the SPY, just right off the bat, you can see here that we have broken that downwards trend that we not currently but did have not too long ago here. You can see how we were in a downtrend for quite some time from the beginning of 2022 all the way into 2023 and some more, and finally we broke out of this trend around this time when we did not make any more further declines into this lower region going into lower lows. And so with that being said, the overall conclusion, looking at this from a logical standpoint, a technical standpoint, economics set aside, we see here just from the price that we are making our way towards the all-time highs, and it's looking good. Markets have been very strong. We've been seeing a lot of strength in the overall markets. But looking at the weekly chart, there is a catch on lower time frames where you can make money on the short side because these prices that we are currently at are not at good prices to be buying. And that is my overall thought process. So let's go ahead and look at the daily chart, and I'm going to go over exactly what I'm talking about here. So looking at the ES, right, we can see here we had this long consolidation period here where we traded nowhere but sideways at this high here, which was about 41.74 on the ES, or just this zone of balanced price where the buyers could not overtake the sellers, and this psychological area caused for the market to be it caused for the market to reject every time that it got to this specific level, right? Keep that in mind. Every time we got to this level, we rejected. On the last rejection around this area here on the daily, we can see that price started to get really tight, and then the buyers were eventually able to overrun the selling pressure, keeping the market from getting above that 41.79 or 41 or 4200. I'm gonna just say it's a 4200 zone right about here of selling pressure, and you can see the market with nice high volume soared, and we went straight up. Now, the three key indicators that I'm looking for here when I'm looking to buy, when I'm looking to put on a trade, these are three things, right? I am looking now. I just cut my own self off right there. But one of the things that I'm looking for in particular is the Bollinger Bands being very wide, and I'm looking to see whether or not the RSI is above the 70 or 80, and I'm looking to see a measured move in whatever direction. Now, looking at this, you can see there is no good area to be going long here. Markets are overextended. Everything is telling us that if you didn't get in somewhere down here, and even I'm not a fan of playing breakouts. Personally, I'm a fan of buying, of getting in at the lowest price. So this would not have been something I would have taken. Now, for instance, let's say hypothetically the market pulled back, right? And we got down in somewhere in this area here again, and then we continue higher. That would be something I would be more willing to trade for the simple fact that it's better risk off management. I'm able to manage the risk a little bit better down here rather than up here. So with that being said, looking at this trade here, you can see we had huge rally, right? Huge rally to the upside. Market just absolutely tearing this thing through the roof. We get from here to the 4,200 up to 4,493 on ES, almost an 8% move towards the upside after that initial breakout. Very strong move. And what happens? There's really no way for you to get in here, right? Because as soon as we break out, we start to get into these overbought areas. We get into these overbought areas, and it's just not a safe trade when it comes to risk, because you don't know when this could pull back, right? So the best thing to do because this is a trending market, but the best thing to do is to wait for some sort of pullback. You want to wait for some sort of pullback, and you want to wait patiently for that pullback. You don't want to wait for the first pullback, and you want this pullback after a 7% move towards the upside, something like this. You want to see a good pullback, a good size pullback. You want to see a good size correction, at least half of the way down, at least half of this rally. You want to see be corrected. That gives this market enough breather to say, I can add. And even if, let's say, for instance, it comes back down here, we start taking some longs in here, whether it be put credit spreads, whether it be calls or debit spreads, whatever strategy you use, shares, whatever strategy you use to make money, in the speculation of price increasing, whatever you use, even if you get in here and the market continues to pull back, you still have this support zone down here, which you could play the risk off of. Now that is better than buying the top of this thing and taking this entire move towards the downside as a loss. You have to think about these things, right? I am looking for trades in oversold conditions, and I am looking for trades in overbought conditions. For this instance, I am looking at the SPX. Right now I'm looking at futures, which is ES, but usually I trade SPX or SPY when I'm looking at the S&P 500. But I am looking to trade call credit spreads right now. And let me explain to you why. As I said previously, overbought conditions sitting at the top of this Bollinger Band. Rule of thumb here is that if price is at the top of the Bollinger Band and we are, testing the tippy top of the Bollinger Band like this, and the Bollinger is spreading apart and getting wider and wider, there's a 95 to 90% chance that price is going to revert back to the mean. Right? There's a 90 to 95% chance. Now, that's not saying for certain there always can be that chance that something like this can happen and it can continue higher. But as you can see here, we weren't even oversold in oversold areas yet. But not only do we have this market in oversold territory when it comes to the Bollinger, not oversold, but overbought. I keep getting those mixed up. But not only do we have this market in overbought conditions on the Bollinger Bands, but we also are overbought on the RSI. Right? 2 confirmations right here. Third confirmation that I am continuing to wait for right now. Now, I jumped the gun on this. I'm not going to lie. I'm already in this trade currently. I'm already in this trade, and I'm already collecting premium on it because I'm very convinced that we aren't going to go much higher. And if we do go higher, it's not going to be too much more higher because this market has to take a breather, right? So I'm betting against this trend. I'm betting against, I'm not betting against the trend because the trend is up, but I'm short term. I'm betting against the option buyers who are speculating that the market will continue to rise, which in probability, in a probable standpoint, is not very likely with those indicators and with the overbought conditions that we're currently in. Excuse me, that's what I'm trying to get out. With the overbought conditions that we're in, there's a slim chance that this market is going to have another 7%, another 10% runner. So, want to see this market pull back. Now, if you want to have that third confirmation, if you're not quite sure, like how SPX or ES is showing us right here, like this is a trade where I'm for sure, like I'm not 100% sure because you could never be 100% certain when you're trading, but I'm very confident that this is going to pull back. Now, if you're not very confident in your trade, there's a third solution that you can have. Wait for a measured move. Now, you may ask, what is a measured move? A measured move is either a higher low or a lower high. All you need to wait for is that one higher low or lower high on the daily. When you get one of those, when you get a higher low or lower high, that confirms to you that now we are trending lower. There is a correction coming in, and that lets you know right there the market has more room to go towards the downside, and selling pressure is now becoming dominant, or on the instance, if you're looking for higher lows, buying pressure is becoming more dominant. So that's all I got for this video today. Hope you guys enjoyed a little bit of this education that I'm giving to you. Those are the 3 indicators that I look for when it comes to my trading strategy. And I hope you guys can use those. You know, not everybody has the same trading strategies, but I hope you guys can implement a little bit of that into your own trading, and it can help you out. And if it does, leave a comment below. Give me more ideas or more questions that you may have when it comes to trading, and I will gladly answer those in future videos. So thank you for tuning in, and I'll see you guys in the next one.